one, go.
Good morning. Welcome back to Academic Markets Insights. Today, we have a special treat for you because it's super timely. We are going to be discussing what Jackson Hole Symposium is all about. It's in the news, it's discussed, there's a lot of buzz about it. Yeah, people say Jackson Hole, but what is it? And Dr. Rowe is going to talk us through what the symposium is, and he's going to give us some other nuggets.
So, all right. Well, as you teed it up for me, we're going to just talk about what is the Jackson Hole Symposium. And every year, the last week in August, we don't have earnings season. They're usually toward the end of the month. We don't have any really significant economic numbers. And the symposium usually falls kind of between two Fed meetings. So you get an awful lot of financial press focus on the Jackson Hole meeting. And one of the disservices they do, and the reason we're talking about this, is they just assume everybody knows what you're talking about when they say the Jackson Hole, the Jackson Hole meetings. Years ago, I had to Google it, embarrassed to ask the question, so I Googled it and found out, or went to the KC Fed's website to see, what it was all about. And in a nutshell, it's the Economic Policy Symposium. It's kind of like the annual economic symposium for the whole Federal Reserve System, because just about everybody that's anybody goes to it. It's run by the Kansas City Fed, they bring together. It's an amazing group of people that they get into the same place. And central bankers, policymakers, academics. Have you been invited yet?
I have not. Have you?
Well, it's always about the first week of school. So, no, of course not.
It's hard to know.
No. And, when they say academics, maybe half a dozen that have written something that might be policy oriented. There's a guy that's at University of Chicago that I believe in 2006 or 2007, did a presentation on how unsustainable the current situation with the housing market was. I believe that's one of the things that came out of Jackson Hole.
Okay.
Also, the Fed chair will speak, and we'll see at the end, because I'm going to talk about a couple of instances where major news or major policy shifts came about through comments made at the Jackson Hole Symposium. So it's a little bit less formal, but it is a forum that has been used to signal to the financial markets, and that's why we've got the press and everybody else paying attention to Jackson Hole, and that's why it's just called Jackson Hole, and everybody's supposed to know what it means. So the first meeting was back in 1978. They held their first symposium. It was not held in Jackson Hole. The first one was in Kansas City. Then they went to Vail. I don't know if Vail's really, I'm not a skier, but I don't really feel like late August. They probably got cheap rates because it was late August for Vail.
Sure.
And then they did it in Denver. And then they went to Jackson Hole in 1982. So the early years, it was and then in those first 3 or 4 meetings, the focus was actually agriculture.
Got it.
The title of the first meeting was something around global agriculture in that end. And Kansas City Fed, that's what you would expect them to be focused on. But they wanted to get the Fed chairman to come speak. And at the time, that was Volcker, who was an avid fly fisherman. And I know, it's amazing the history of some of these things. Did you have fly fishing on the bingo card today? No, but
No.
they moved it to Jackson Hole in 1982, and everybody loved the location, so it's been there ever since. But apparently, part of the idea was, let's find a place that Volcker will go to and have it there.
Sure.
Having been involved, and you have as well, in putting together conferences, etc., there is some of that. Where are people willing to go to, etc.? but it's stayed there ever since, and people just love going out there. The only times that it was not in Jackson Hole since '82 was, needless to say, during COVID. They held the symposium virtually during COVID in 2020 and 2021. Usually it's a 3-day event. 2020 may have been one or two. One of them was 1 day and one of them was 2 days. And then at present, and this really did commence in 1982, but it's much more, most of the comments are focused on the financial markets. I don't focus on the agricultural markets, but I went through a couple of previous programs and didn't see anything that was talking about ag. So it's definitely moved to purely financial market oriented symposium, and just about anybody and everybody that is associated with the financial markets goes to this event. Needless to say, central bankers, and it's not just our central bankers, which one of the interesting things about the upcoming meeting is there's a lot going on with all the central banks. We've got a situation where longer term rates at every developed economy is pretty much where we were in 2007. So this is something that probably is going to get addressed at the meeting this week. And it's something that's going to involve coordination among probably like the Bank of Japan, the ECB, the Bank of England, and the Federal Reserve, and officials from all of the, needless to say for the Federal Reserve, but officials from those other three entities will be there as well. So not a lot of expectations on what may come out of the meeting. I think, we've got rate situations, we've got some issues in in Japan. This is a chance for them to get together and maybe coordinate what they're doing. So maybe a surprise out of this meeting.
And I'm hoping that they start talking about some of the things that we've been talking about. So private credit, insurance issues. So because we've seen some of these cracks in the financial markets, and it'd be very interesting if other people are seeing them and what they're thinking about them and what they're thinking about doing to correct those issues.
So they do have a topic of focus every year. This year's is like payments and payment systems and things like that. So unfortunately, the main program isn't very interest rate oriented. But my feeling is you get the head of the Bank of England, and you get Warsh at the bar about 2 a.m. You never know what might happen.
Never know.
I've been at volatility conferences. You never know what new volatility products being created at 2 a.m. at the bar.
But that's a volatility conference. Anything can happen for volatility.
Anything can happen there. Well, anything can happen in Jackson Hole as well. I don't know what academic papers may be presented, but I did mention that there was one related to housing in the past. I think Bernanke has done some things, not when he was Fed chair, but with respect to talk about financial crisis. So the academic papers probably follow the main topic of payment systems, et cetera, this year. You've got government and policy leaders, not just, Fed officials that are involved in policy, but also regulators. And then all the media sets up. They've got all their own booths, and one by one, Kevin Warsh will stop by CNBC. He'll stop by Fox Business. He'll stop by Bloomberg, my favorite, Bloomberg News. I think even Yahoo Finance people set up their video out there for the week. So it is a way, if you want to get something across to the investing public, you've got a microphone in front of you and you've got a very captive audience. So it's one of those things that's kind of fed on itself. They'd say things of interest at Jackson Hole, and all of a sudden, all the media guys are going out there and have their own spot out there. But back in the 90s, when late 90s, when I started my career, I don't recall, anybody reporting from Jackson Hole, and definitely them not moving the whole setup out there. So sure. I just think that's an indication of how important that meeting is as far as the possibility of new information. Now, I went through some of the more recent meetings just to show where some things that impacted the markets have come up. In 2020, This was pretty interesting, and I've always been a big fan of talking about the dual mandate. And I always liked that Powell would start his press conferences was we continue to pursue a dual mandate of moderate inflation and close to full employment. That's what they're supposed to do. But what he said in the 2020 meeting, that the target inflation was 2%. And he said, if it's 3% for half a year and then it's 1% for the other half of the year, it's 2%.
Okay.
and what I'm saying very basically there was it used to be that the consistent target was 2%, but they kind of reworked it to an average. Sure. And this was likely to allow for the inflationary pressures that were building around COVID. This would be, in COVID, it was like a year and a half experience for most of us, depending on where you live. And if you're in Texas, it was just a couple of weeks. But up here where we lived, they were shutting us in and everything else. But we're about 6 months into COVID. You've got to assume when the economy shuts down, when it usually is moderated like it was during COVID, that you would expect it to pick back up and there to be some catch up, and that would cause inflation. So I think that's what prompted just tweaking. I'm not going to say changing, but tweaking how they approach inflation. And if you're going to overreact the second that the CPI goes to 2.5%, you're just creating excess volatility in the market. So I think it was a pretty logical thing to do.
And I think it was a way to soothe panic.
Yeah. Yeah. Now, this is one that did kind of create a little bit of this may be one of the more significant announcements from the Jackson Hole Symposium. When Bernanke was chair of the Fed, he was talking. We were continuing to come out of the financial crisis of 2008, and we had extremely low rates. Rates were near zero. Bernanke was talking about buying long-term securities, which is quantitative easing. That's and in fact, I was kind of surprised. Recently, I believe the Treasury was buying back some bonds and to try and keep longer-term rates under trying to keep them closer to 5% than 5.25% or whatever. And I didn't hear anybody refer to that as quantitative easing. But isn't that the same thing?
It is the same thing. And I think when we think of quantitative easing, we think of it in a different part for the
yeah,
world, right?
Yeah.
It's one of those, when we think about it, we think about historically those shorter or the smaller rates or lower rates, pardon me, as opposed to what we're thinking now when we're looking at 5 versus 5.25. When you're thinking about a quarter versus, a half, that becomes.
Oh, yeah.
And it's interesting because quantitative easing, and I'm glad you brought this up, this was 2010, for our number one fan. When we think about some of these things, the financial crisis happened in 2008. There's a lag effect that people didn't really start losing their jobs until 29. And that's when really the recession and things like that happened.
Mm-hmm.
And quantitative easing was designed to stimulate the economy to get us out of that recession. So it's a longer period time of activity that's going on with the economy than just the crisis happening in 2008. There's a lingering impact, and it can have a substantial long-term impact on individuals.
Yep. So, what else was with respect to what Bernanke said? He said it was coming, and then it came.
Yeah. And this one, I believe, because the first round of quantitative easing had some positive impact, and I think that's why he was redoing some of that quantitative easing. However, the second round started to put us into a liquidity trap. So lots of fun things that came out of this.
And then more recently, and this is actually this anti-inflation reset. I went through and did I did a write up for NASDAQ on how the NASDAQ 100 has behaved around around the Jackson Hole meetings. Basically, index performance from the Wednesday close before the meeting weekend through the Monday close, where Monday we have a chance to react from anything that came out over the weekend. And in 2022, the NASDAQ gave up a little over 3% based on the anti-inflation reset that was, if you're going to try to restore price stability, that involves raising rates. It's not good for economic growth, and giving up growth to defeat inflation. The equity markets did not take that in a particularly positive manner. So that was, and that's when you're paying close attention, when you're, not taking the bathroom break or anything while Jackson Hole's going on. This is the kind of stuff that you want to be at your screen in case it comes out. There are not a whole lot of guesses as to what Kevin Warsh is going to say or do. Everybody's still trying to get a focus on, trying to get a handle on the reality of Warsh versus what he said when he was trying to get the job with Trump. And there was always a feeling that he probably would be very agreeable with President Trump and then start to do a little bit of his own thing. Sure. When he took the reins, and everybody continues to try to pick up on that. Right now, we have one more rate hike priced in by the financial markets for 2026. And then maybe one more. It's only like a 70% chance that we get a second one in 2027. And that number has stayed pretty steady as of late, even with some of the other commentary that's been going on. If War says something like another rate hike is likely to be needed because we see percolating inflation pressures, those odds will change. You might, and so if you have the ability, paying attention to those odds, the CME has a great website. I'll put that link to the website that shows the Fed odds in the description of this video, so you can actually watch that as it maybe changes if something comes out of the meeting. How much of an emphasis policymakers at the meeting have about inflation versus economic growth. It feels like inflation may be under control. It's very rare that we've gotten one big move up in inflation and then it hasn't been followed by a second one.
Okay.
And there are also just fundamental things going on in the world. We don't have oil flowing fully. We've got continued trade wars, et cetera. We're not getting along particularly well with Canada right now. Which, I mean, gosh, you really got to try hard. Now, Canada's like the Ned Flanders of neighbors. You've really got to push hard to, Homer Simpson hasn't been able to piss off Ned Flanders to the point of losing it. I think maybe once in 30 plus years. So, right. Yeah. Okay, but we've made Canada mad somehow. And, if anything that addresses the level of longer term rates, and that's where, longer term rates bumping up, they basically are matching levels that from before the financial crisis. So we've finally made that round turn in 19 years. Any discussion of that might result in a longer bond rally and shorter term rates going down a little bit. If I were going to try to make any sort of speculative trade into the weekend, I think I would buy like 10-year or 30-year bond futures with the anticipation that maybe they say something about being concerned about the longer end of the bond or taking action to bring those rates down a little bit. And the Treasury's already focused on them. And as nice as, Canada is, our current Treasury Secretary, Bassett, I would not want to be on the other side of that guy.
Nope.
You can see the hedge fund background in him, for sure.
Yes, you can.
Yeah. So, all right, with that, here's who we are, how to get hold of us. We'll be paying close attention. If something really good comes out of Jackson Hole, we'll probably post another video. It's saying, look, we were right. If nothing really good comes out, then, we always talk about other topics as well.
Absolutely. Yeah. With that, we thank you so much for hanging with us. We appreciate you watching our video. If you like this, please hit like. And if you haven't, please subscribe because we are here to present things that are happening in the financial markets as they're coming out. We're looking to help supplement some of our graduate students so that they can get into some of the weeds for some of the things that we just can't cover in class. If you have a specific topic that you would like, please write it up in our comments. And constructive criticism is always well received. We thank you so much.
Yes, we like the criticism. Dr. Ademiak now has a microphone.
It's true. I'll show it to you. Yay!